This is John Gilbert at Security First Asset Management with the weekly market update. Now, first off, I'd like to start by just saying I hope that everyone had a wonderful Memorial Day and that you took some time to remember those that paid the ultimate sacrifice for what we have. Now, this weekly market update is going to be covering the period of last week. So that's last Monday, May 19th to last Friday, May 23rd. Before we get too far into that, just wanted to remind everyone of some of our upcoming events that we have. So Mark Ballard will be coming into the office in June. That will be June 12th in the Macon office at 5:45. Originally, the date was on a different date. Mark had to have that date adjusted. So if you had previously signed up, just know that the date is now June 12th. Alrighty, now going on to our actual weekly market update. So last week, market started off there's a relatively quiet start to the week. Now on Wednesday, stocks took a sharp turn lower. After a few more volatile days, the major domestic equity indexes finished the week lower. So the S&P 500 index finished the week down 2.6%. The Dow Jones Industrial Average and the NASDAQ Composite finished the week down 2.5% apiece. So the week prior, the S&P 500 and the Dow Jones Industrial Average, they both moved into positive territory for the year. Now, with last week's negative returns, both of those indexes fell back into negative territory for the year. Now, stocks have mostly recovered from their April losses, but there has been a trend away from U.S. equities and into Europe, and that is still continuing. U.S. Treasuries last week, they took a hit after a weaker than expected auction of 20-year U.S. Treasury bonds. So the weak auction and subsequent move in yields was partially attributed to the credit rating agency Moody's. So they downgraded the U.S. sovereign debt at the end of the prior week amid concerns that the rising U.S. federal debt and fiscal deficits could potentially cause problems. Now, this problem appeared to be amplified later in the week after the House of Representatives passed President Donald Trump's tax bill, which, as drafted, would increase the federal debt considerably. Now, speaking of that, President Trump's agenda of tax cuts would put more money into people's pockets, but it also stands to dramatically widen the country's deficit. And that's fueling worries about the potential blow to households, businesses, and the broader economy. As measured by consumer sentiment surveys, Americans are feeling gloomy about the economy after President Trump's market-rattling first few months in office. Overall, though, they are still spending at a pretty good rate, which is keeping the economy humming, at least for now. If anyone would like to attend any of our upcoming events, please reach out to us. We will be more than happy to add you to the list for those RSVPs. Y'all please contact us if you need anything else. Thank you so much and have a blessed week.